Here are 3 companies that analysts are very bullish about. We do not own any of these 3 companies personally, as a disclaimer. And as usual, guys, not financial advice. What we say, please do your own research. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Guys, as a reminder, target price is just an opinion. It's not a fact. It's not a science, right? It's an art. They can get it wrong. Number 2, target prices do change over time quite drastically, actually. And as another reminder, do your own research. So we start with the first company, HPPHB. Wow.
Yeah, this one is a corrugated and non-corrugated packaging company.
Yes.
Yeah, they have been listed in 2021.
Yeah, so if you look at the chart in front of you, Google, it's down to 42%, but recently there's a 45% pump. We'll get into the reasons later. As Jonathan mentioned, they are into corrugated packaging.
And also printing also.
Printing,
yeah.
You know, very normal, everyday kind of stuff. Profits, pretty choppy, but especially after listing, as usual, the sales and profit numbers start to decline.
Yeah.
As a rule of thumb, every time, I don't know what your response would be, but every time a company lists and when they put out the prospectus to show you the numbers, it's always pretty good. It's always on an uptrend. But then after that, it falls. Why? Because there's just an incentive for them to have the revenue and profits higher because the valuation will be higher. I don't know about you, but I always prefer people, when we are watching, when you are reading the prospectus, to have a 25% discount in mind. So whatever they report, discount it by 25%.
Yeah.
Maybe it's too high, maybe it's too low, but at least I think it's a good rule of gauge. I don't know if you agree with that.
Yeah, I agree.
So I think people are quite positive with the company. Highest upside by Kananga. Latest report, 72 cents. That's almost a double.
Yeah.
And just maybe let me go through this, right? So January, they were saying sales were quite weak as far as consumers are concerned. By the way, 50% of their sales, more than that, comes from consumer electronics. And then suddenly in August 2023, a lot of the earnings coming from this thing called paper pulp molding, which is the thing you see on your right. I think it's the same thing that they use for eggs.
Yeah, correct.
Right? Just that this one is more for consumer electronics. When you open the very nice box, you know what it looks like. Yeah. Margins very healthy at 20 to 30%, and then they are foreseeing a semiconductor.
Yeah.
pickup.
Actually, I saw this when I actually bought this this new laptop. Yeah, I saw this paper
it was
pulp
used,
molding.
right?
Yeah, it was inside. And this PPM is targeted to make about 20 to 30% margin, which is higher than their corrugated and non-corrugated paper packaging, which is around like 10% to 15%.
This is 10% paper pulp.
Paper pulp is 20 to 30% net margin.
No, sorry. Contribution.
No. So this one, they haven't really... This one is a new business.
Oh, it's new business. Okay, that's good.
It's a new... they're going to produce this more.
So here's the valuation. 13 times earnings for 2023 initially. Then now it's up a bit to 16 times earnings. So there's a little bit of what we call margin. No, sorry, not margin. Multiple expansion.
Yes.
Right? So this is pretty decent so far.
Yeah.
And,
Yeah, so if you see why I highlighted this on the red, right, is because they projected they made about 96.4 million and 12.5 million in revenue and profit, right? But then if you look at the numbers, they actually, I think it's a miss. Kind of like a miss. Because if you remember, this has 80 million, 9.3 million. Yeah.
Yeah, so it's a 25% overestimation.
Yeah, and then here they start to be very conservative already. In April, once the earnings, everything starts to like pop up already. But then...
Well, it's conservative for 2023, but then 2024, they are back to the same kind of bullishness that they displayed,
exactly.
Right? In fact, their 2024, so they have changed their... they had to adjust their miscalculation on 2023 because it went from 12.5 to 9.3. But 2024 one actually went up their assumptions, right? 16 million to 16.9.
Yes, exactly. So that one, they are still pretty bullish on their PPM business
So
segment.
they're so a lot of it stems from this corrugated box stuff.
Yes.
Whether or not it's better because of higher margins and maybe even growth.
Yes.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. So next company, Swift Haulage.
Logistic company.
Logistics company based on Google, down 52%. It's
pretty flat.
Yeah,
right?
it's not too good.
Yeah.
And
So
this is the business. So continuing haulage, land transportation, warehousing, freight forwarding. Pretty standard kind of logistics services.
yes.
Pretty flat revenue, maybe a slight trend upwards, but when it comes to 2023, it looks like it will. Oh wait, so this is annual financial highlights. Yeah. It looks like it will maybe just edge. Maybe.
Yeah, maybe.
But the profits probably won't.
Yes, exactly.
So revenue might be same or a bit up, but profits will be down. Almost everyone's bullish.
Yeah.
Right.
Surprisingly.
Kananga thinks it's a double. No, the thing with Kananga is that it's never in between, right? It's either very
Super
high or
bearish.
very low.
Yeah.
Which I think is great in that they actually have conviction in some of their one. So yeah, Kananga 85% upside. Actually, last time was even higher.
And then they start to reduce a little bit.
So their thesis is that in March, they're thinking the warehouse space will increase, things like that. And interesting that they have exposure to Pengerang.
Yeah, stable. So there's a lot of warehouse that is near around Pengerang and Port Klang. So they kind of like expected a lot of like activities to be very stable around that area. But then when it comes to May, then they got a lot of disappointed numbers because they didn't anticipate that they hired more staff in order to like cater to all of these things. So they have been very conservative with all because of these high costs. And then in August, another thing that they didn't anticipate is that they did a lot of this green initiative. Basically, they upgrade their fleet to cut carbon dioxide, and also because they hired more staff. And that's why I can see the TP also kind of reduced a little bit already.
Okay. Yeah. Hire people, TP drops. Nice.
Yes.
These are projections. Pretty low valuations, but shipping as a whole is not as attractive as it was in 2021.
Yep.
So it makes sense for it to be lower. Their projections dropped quite a bit by 13 million from 68 to 55. So take note of that. Why is it that they've changed this? Well, because I think shipping's outlook is it's not as good anymore. Right. Okay, anything you want to add?
No.
So last on MGB.
This one is a property development company.
Yeah, big jump, quite a big jump in this year.
Yes.
50%. Business, property,
construction and trading. Yeah.
Okay.
Very, very normal business.
Cyclical, just like palm oil. But they're on a downtrend, which is interesting. But of course, if you see second quarter, your prorate is going to be the highest revenue compared to the previous 10 odd years, right?
And profit as well, assuming they still make the similar range.
Yes.
Yeah.
So analyst calls a lot upside by Public Bank, RHB, even JF
Apex.
Apex.
But we're going to be looking at RHB OSK because they have been upgrading from February. So initially they say 64, now they upgrade to 1 ringgit. The reason is because they think that their earnings growth will actually grow more than 20% in 2023 because of good labor condition. I don't know what does that mean. Maybe because foreign laborers can come in and they can work for them. Maybe that's the reason. And then there's also another thing is that their property projects, which is Idaman projects, has getting a lot of strong demand. I have actually attended their management briefing, and so far the Idaman projects, I believe the first 2 projects sold out pretty well. The third and fourth is going to be launching later on, second half of this 2023 and also early 2024. And so far they see very promising interest from the public. So yeah, maybe can expect Idaman project to contribute heavily to their revenue and profit. But another interesting thing is that from March, they actually signed an MOU with this company, which is Sani Amaria. for Construction called Limited. This is a Saudi Arabia company, and they want them to actually help them to put this thing called or build the precast venture, which is something like this. This is the precast venture, and they actually projected the contract will give them about 8.7 million per annum of bottom line for the next 5 years. And then in August, it wasn't an MOU, they finally signed a contract, so they JV'd with Sani. And then right now they have this earnings accretion of 22.7 million over the next 3 periods. I believe this one is they calculated for this entire 3 years. So if you divide it by 3, it's more or less about the March 2023's figure, maybe lesser a little bit. And they expect that these earnings will contribute in the second half of 2024. So a lot of things of the catalyst is coming from this Sani Ala Merah earnings, and their contract. So so you can see the numbers, they are pretty bullish. So far, profits and everything has been maintaining at the 50 million and 55 million range in 2024. Revenue also has been pretty much the same. So I think that is why they are so positive on MGB's outlook because they have this Saudi Arabia contract. So that's actually a very simple thing only. Got new contract, got new earnings. Then
nothing for me to add. Pretty simple. And guys, if you're interested, I think we talked about FIRL Pro a lot. If you're interested in getting a program that really speeds up your research journey into finding potential high quality investments, FIRL Pro is the place for you. On the right is our performance, not too bad so far. And if you want to check out a free sample of what's inside FIRL Pro, the reports, do check out our free sample. Link in the comments and the description. And thanks guys for staying all the way until and let us know if you like this whole series, right? Let us know in the comments. And guys, see you in the next video. Bye-bye.